Good morning, everybody. This is Friday, Good Friday, December 18th. We're ending the Fed week. I'm Yohay Elam, Forex Crunch and Market Movers podcast, doing the show for FX Street as usual. Today, well, as usual, we'll talk about recent developments. And we had a surprising move in Japan overnight, some charts and levels, and the next 24 hours, actually, the next week. And of course, as always, most importantly, your questions. So if you can't see the chat box on the screen under the video, please go to this address, tlk.io/fxstreet-forex-live-video, the address you see there on the screen. So, let's begin with what we had yesterday. We had German IFO missing expectations, coming out at 108.7, a bit below predicted, but it didn't have a lot of an impact because other figures were more or less balanced. Retail sales, which always move the pound, they surprised the upside with a big jump, 1.7 month over month. This caused a stronger pound initially, but then it faded away with the dollar strength. US jobless claims came out a bit better than expected, but the Philly Fed missed. It remained balanced over there. And we had the rate decision in Japan. Now, we had a surprise there. And let's take a look at the chart of dollar yen. It can perhaps tell us the whole picture about this confusion. Let's change it to the 30-minute chart so you can even see it in a better manner. So we had dollar yen grinding higher. This is the dip that followed the Fed, and then we had it move higher above the 122.20 level, which we talked about many times as a good separator of ranges. Okay, so we climbed up. Remember, 123.60 is the line we talked about as resistance. So we had it move up, but still very well in range between 122 and keeping a safe distance from 123.60. And then came the Bank of Japan. First of all, they don't have a fixed time for releasing their decision, and they took their time more than usual. I mean, some market analysts expect a specific release time, and it was delayed and delayed. Then we heard about some action. So they were about to, and they announced a new program. A new program means more printing of yens, more weaker yen. So we've seen dollar yen shoot all the way up here. Actually, the high for today, I think it's just at resistance. Let me take a closer look. 123.55. Okay, just 5 pips from resistance at 123.60. But then markets began getting the full news and began understanding that, first of all, the Bank of Japan actually replaces an old program that is about to expire. The actual additional easing is just 400 billion yen. It sounds a lot because it's a lot. 400 billion sounds a lot, but in the bigger scheme of things, it's only yen, and we have a program of above 80 trillion. Okay, so it's very, very marginal. It's about 0.5% more that replaces the old program. In any case, it's not such a big deal. Okay, so what we had is the counter reaction. We had a pair not only fall from the sky from 123.60, but even dip below this support line of 122.20 that we talked about. So far, the low has been 121.64. We're seeing it around the lows during the show. Why is the yen falling? Why is the yen strengthening so much? Why is dollar yen falling so much? That's because, well, first of all, we didn't expect anything. If the Bank of Japan wouldn't have said anything, we would have probably stayed around 122.50, something like that. Okay, but because the Bank of Japan did surprise us with action, and this action is very, very limited, we don't only have the disappointment, but we have another school of thought saying, if this is what the Bank of Japan is ready to do now, it's not going to do anything in the near future. So we have basically, it closed the door on more action. That's it for the BOJ. Less monetary stimulus, less printing of yens. That means a stronger Japanese yen. Okay, this is really a development of the last hours. But anyway, even if expectations were created by mistake, we've seen that with the ECB, and then there is some kind of disappointment, then it goes the other way around. Okay, so that's sort of the big event of the morning. Good morning, Fabian. Good morning. Don't know how to pronounce your name. EDZFX. EDZFX today. Sinatra. Okay, you're saying here today's dangerous day for trading triple witching hour. Yeah, my rule is no live trades on Monday or Friday in the last few days of the week, witching days. I guess to help me stay alive for long. Okay, so I think that's a sound advice also for everybody. In general, we're in December. It's exactly 1 week from Christmas. Okay, liquidity is relatively low in markets, and we're after the Fed. Many traders waited for the Fed and perhaps are gone now. Liquidity is low. We have the triple witching in options, and it's also Friday. That means it's also a crowded day towards the fix. All right, so you're absolutely right. On such days where we have option expiries, low liquidity, the end of the week, close to the end of the year, please trade with extra care. We've seen these wild moves on the yen. We were not expecting it. Okay, we mentioned this rate decision by Japan all week, and I expected no change. They missed their chance to do a lot of things in October, and things looked better. So now they did only some adjustments, and we had some crazy action, partly because of the low liquidity. Okay, so thank you for that advice. Let's see what else we have today on our agenda. Okay. So we talked about what we had yesterday. Today it's a relatively light day. Well, had this big surprise. We have at 9 GMT the Eurozone current account. Let's look at the Forex Street calendar on Forex Crunch. Today is Friday. Yeah. Oh, I'm already looking at next week. Sorry, let me find today. So today we have the current account from the Eurozone. The seasonally adjusted figure is expected to stand at 28 billion. It's a surplus. Remember, it's because Germany exports, not only Germany, but German exports make the difference for a surplus in the current account, but it doesn't have a very big impact. We have at 1:30 perhaps the main event for today, not the main event for all markets, but for those trading the Canadian dollar, the Canadian inflation report, where let's see what we're expecting over there. So the most important thing is to look at the core inflation year over year. Okay, it stood at 2.1%, now it's expected to rise to 2.3. Of course, if it rises, it limits the scope for action from the Bank of Canada, even though recently the Bank of Canada opened the door to cutting rates as low as minus 0.5%. It's currently plus 0.5%. Also of interest is, of course, the headline inflation number, which is also expected to rise from 1% to 1.5%. These are figures for November. Headline inflation is still lower because of oil, but this base effect is beginning to diminish because in November last year we had the OPEC decision that decided not to cut rates, the event which triggered the massive fall in oil prices. Of course, since then we had fluctuations, we had further falls towards January, we had rises, and recently we have a fresh fall in oil prices. But all in all, the base effect of the big fall is moving away. Okay, what else do we have in our agenda today? At 2:45 GMT, we have the market services PMI. Remember, it's the preliminary figure by market, not ISM, which has carries much more weight. And at 6 GMT, Jeffrey Lacker, I think he's of the Atlanta. No, don't remember. Anyway, he's a member of the Fed. He's a hawk. He voted for a rate hike already back in September. Let's see what he has to say about the future path of rate hikes, about the rate hike. That was actually the main event of the week. I found myself a bit surprised talking about the BOJ, but you have to adapt yourself to what's going on. All right. So let's look at a few. Let's see if you have questions, and then look at a few charts. Another comment from EdsFX. I demo only on those bad days for practice. Yeah, good advice. Fabian says, is the calendar on Forex Crunch exactly the same with the one on FX Rate or any difference? It's basically the same data. Perhaps there's a difference in format, different columns, but it's the same data. It's the FX Rate calendar. All right. Okay, let's talk about a few charts. And so we talked about dollar yen. Of course, big market mover for today. 121.73, some support there at 121.40, at 121.10. resistance now back to 122.20 after this roller coaster, after this big move today. We don't often see such a move of nearly 200 pips so early in the morning, especially. Okay, let's get back to the top. Dollar, euro dollar. We had a dip once again under 108.30. This line is beginning to be erased. Yesterday, what we had in markets in general is a stronger dollar, an extension of the post-Fed dollar rise. But there was a difference between major pairs, the safe havens like euro and the yen, which dipped just a bit, against the US dollar, and other currencies which moved more. So I'm lowering this line now to 108, which is the round number. We can already see this as a double bottom. It was the bottom post-Draghi, the post-Draghi sort of recovery of the dollar against the euro. And now again, it's another low. 108 is the key. I also published on my website commentary from a bank from Societe Generale saying that 108 is an important level to watch. Okay, on the top side we have 109.50, 110, 110.70. On the downside, 107.60, 106.30, and 105.30. All right. Relatively resilient euro, currently at 108.50, bouncing from the lows of 108. All right, and we had stronger reactions. The US dollar strength expressed itself in a better manner against other currencies. For instance, the pound. It dropped under 149. It's recovering now, 149.23. But all in all, it had a very bad day yesterday. Despite the good retail sales, the strength of the dollar was just too much on the day after the Fed. So it basically each time extended its falls and continued to the downside yesterday. Okay, so this is the Fed decision, working around 150 and then grinding its way down. Okay, I see support 148.50, resistance 149.50. No significant events for the pound today. Anyway, it's showing a lot of weakness. If the pound cannot rally on good figures, I mean, it rallied only temporarily on retail sales. I think it's right here. Then it shows us a lot of weakness. Okay, dollar yen we talked about. Canadian dollar CAD. As I said, the sky is the limit. All the technical resistance lines that you can imagine are not so meaningful because the pair is moving higher. The high so far 139.60. No, sorry, yesterday we reached higher levels. Anyway, we've seen the Canadian dollar as very, very weak. Yes, we had another fall in oil prices yesterday, that's true. So 139.86 is the high, almost at the very round number of 140. But it's important to remember that WTI crude oil already traded at lower levels, but for the Canadian dollar, these were new extreme highs. So I think we had a question yesterday, I think from Fabian, about a correlation between CAD and oil. So when oil falls, CAD falls even more. When oil recovers, the Canadian dollar recovers just a bit. Very, very vulnerable currency. Okay. Today, the most important event to watch is of course the inflation numbers. Some kind of support 137.87, a bit stronger support 136.20, but the big breakout was above 134.60. Where's the limit? I think 140 is an important line to watch, especially on this triple witching day. And just because it's a round number, but basically I don't think the Canadian dollar has reached the bottom of the barrel. As we said, with dollar CAD, the sky is the limit. And any other metaphor you wish to have, dollar CAD awakens or things like that. Right? Aussie dollar. Oops, just a moment. The screen refresher. Yeah, we have the chart. I talked about Aussie dollar with 72.80 being a very, very important line for the pair. We've seen it work as an excellent separator of ranges. Post-Fed, we had another attempt to break above this level. This attempt failed. We found some support at 71.50, and then we had another breakdown below this line. Okay, so this is more of a risk-off atmosphere spreading to other currencies. Yesterday we had this. That's why safe haven currencies like the yen and the euro weakened less against the US dollar, but the Australian dollar, which held quite well so far, is beginning to crack. Okay, so the low so far has been the round number of 71. 71.50, 71.60, I would say is some kind of resistance. We're getting close to there. Let's see if the pair can climb back above, because we're seeing some dollar weakness this morning. Okay, the Kiwi dollar also perhaps the strongest among commodity currencies. It dipped under 67, manages now to climb back above. It already traded at much higher levels earlier this week, above 68. All right. All in all, I still see it as a strong currency. We had a rise in milk prices this week. Good news. All right, but also the Kiwi dollar sort of felt the pressure of the US dollar yesterday, trying to recover just a bit today. Dollar Swiss found itself capped by parity. So let's change the line here. 99.52 is the current level. Some support at 99. Remember, lots of intervention by the Swiss National Bank on Euro Swiss. For a change this morning, Euro Swiss is not at the 108 handle, but at 107, 107.87. Look how nicely it finds support here at 107.60. It seems to me, my suspicion is that the Swiss National Bank defends this line. Okay, but you see 107.60, very nice support line. The pair hasn't really been below, didn't trade consistently below this line since the summer, so perhaps this is the line in the sand for the SNB to intervene. Anyway, on the top side in Euro Swiss we have, I guess, once it goes back to 108, 108.40 or something like that, heavy intervention there. Euro, pound, we had weakness in both currencies, but I think the euro has shown a bit more strength, not going anywhere fast in any case. 73 works as some kind of resistance. I would say 72 is some kind of support. Okay, let's also look at euro yen and see if you have any questions. Euro yen and pound yen. Euro yen is falling. That's because of all the crazy action in the yen. This is a fall from this morning. We have weakness in the strength in the Japanese yen, and that's why we're seeing this pair tumble down. Let's zoom out just a bit. All in all, it made this huge draggy leap here, reached highs 134.20 is my line, 131.50 is now support if the pair falls lower, and 130.60, and under the 130 level we have 129.75. Okay, and pound yen, that's quite a deterioration on pound yen. Of course, the most recent roller coaster is because of the Bank of Japan's confusing decision. We're seeing it fall to support here at 181.50. Certainly lost its highs. The pound in general has been pounded by the Bank of England, by its dovish message, and we're seeing the pair falling. The yen has been relatively stable in the past few weeks. Okay. Okay, euro dollar as we speak is dropping just a bit, but not going anywhere fast, still well within the range. Okay, well, it's actually, in comparison with the last few hours, it's falling quite a bit. It climbed very carefully up the stairs and fell down the elevator shaft, if you wish, but anyway, 108 is support, and it has quite a nice trading range. Perhaps we have some kind of line also here. Maybe this line, 108.80 is another separator of ranges. Let's see if the pair attempts to break higher or if it falls below this line. In any case, we're seeing the dollar re-strengthen now also against the yen. At the beginning of the show, I had a focus on the yen. It was at under 121.60 something. Now it's at 121. 80, so the dollar is re-strengthening. All right, let's see if you have any questions and continue. Can't see how to upload chart here. Well, I don't think there's a way to upload a chart here, but if you upload it to sites like, I think, Imgur, then you can post a link. Maybe Mauricio has other options, but I know this one. You can upload an image instantly and then share the link. Okay. Anyway, I was talking for already 20 minutes and I hardly mentioned the Fed. Well, I did mention it, but it's still the huge event of the week. It strengthened the dollar. Well, I have here the preview for next week. Where is the Fed? Yeah, let's remember what we had on Wednesday evening. Okay, I hope you can all see what we have here on the screen. In general, we had the Fed raising rates for the first time in nearly a decade, first time since early 2006. It's a move of historic proportions. Yes, it was priced in, but the future path of interest rates that it currently remains the same isn't priced in. Okay, so the Fed actually told us that rates are going to rise 4 times in 2016, which is unchanged from the previous assessment in September. Everybody expected them to lower the path. Okay, now I still don't think they will raise rates 4 times next year by a full percentage point, but they didn't change this dot plot, so that was hawkish. Okay, in terms of forecasts, they left them mostly balanced, higher growth, lower unemployment, lower inflation. One of the things also that strengthened the greenback was that there were no dissenters. Okay, because that means that Yellen managed to sort of gather everybody around this decision. It shows a united Fed. It's good for the US dollar, good for showing confidence. Okay, in her press conference, sorry, here we go. She explained, why did we raise the rates? Because they don't want the economy to overheat. They want to be ahead of the curve and then not need to raise rates abruptly and then cause a recession. She talked about low inflation as transitory, means that current headline inflation is impacted by oil prices, and core inflation, yes, it is also impacted by the stronger dollar, but both effects are transitory. And she also said there's no need to see inflation reach 2% before moving again. So this is not a surprise because inflation is lagging. Inflation comes after employment, but it's still a reminder that the Fed wants to be ahead of the curve, not to see the white in the eyes of inflation before moving. That means relatively hawkish. She countered that by saying that monetary policy is still loose and they're watching inflation. Anyway, it was all in all a show of confidence in the US economy, higher rates on the radar, all in all, stronger US dollar. We did have some choppy action in the beginning, but I believe that this trend of US dollar strength is set to continue. All right. And as we speak, we have a few more pips in all currencies. A bigger fall in euro dollar, 108.15 at the moment. Let's see if you have more questions. Hi Pan, hi everybody. I'll see if we have some headlines. I think it's more positioning. As EdFX said, we have lots of movements on a Friday, right? Because there's the triple witching in options. It's thin liquidity. It's the day after the Fed. What I didn't mention about the Fed is that it began implementing the rate hike yesterday, and many feared that they would have problems implementing it with the reserve purchasing mechanism. But as I said yesterday, they prepared for this for 2 years or so, did all kinds of drills, and it worked out pretty well, I would say. So we had no problems in implementation. Also, Yellen expressed confidence about implementation yesterday, so it looks so far so good, as they say. So I expect this trend to continue. It's never a one-way street. Remember that. So okay, let's see other things that we have on the agenda. If you have questions about more currency pairs, anyway, as usual on Friday, we'll have today also a preview for next week's events. It's the week of Christmas. It's a bit lighter than usual, but we still have events. We still have the echoes from the Fed decision. Right. So the last thing regarding implementation from the Fed comes at 8 a.m. Eastern Time on Friday. That is 8 a.m. Eastern Time is 1 GMT. Okay, so 1 GMT today. Maybe I'll add it to my notes. We have the first post. Okay, let's add it right here. So not first post Fed rate. So the New York Fed publishes every day the effective rate. Usually it's been for the past few years between 12 basis points, 13, 14, 15, in the range between 0 to 0.25. Now we'll get the first time to see it in the new range between 0.25 to 0.50. Okay, so the middle is 0.37. If we get anything that is a bit lower, it's still okay. I would say if it's 0.30, it's okay. If it's very close to 0.25, then it might be worrying. I don't think we will have any surprises because the Fed is so prepared for this that I guess we'll have something very much in the middle. If we have closer to 50, it might be even more bullish. Anyway, we might have bigger fluctuations at the beginning. Low liquidity. It's the first post-Fed rate, but eventually it'll stabilize, I believe, in the middle of this range, 0.25 to 0.50. Question from Fabian: fall of more than 60 pips in Eurodollar in 20 minutes at London Open. Yeah, I'm also looking to understand what happened. I think it's just a re-strengthening of the dollar. Positioning Friday low liquidity. I see no news running on Twitter or anywhere else saying anything. But in the past, we had you guys helping out with finding the breaking news while I speak. So if you happen to find the relevant headline, then please shout it out. I can't see anything. I see a general strengthening of the US dollar. We're seeing at least nice support here from euro dollar at 108, just above 108. Dollar yen is strengthening but more limited. Pound dollar is at the round number of 149. We began the show at 149. 20, if I'm not mistaken. And dollar CAD, well, it's more in majors, I think. Dollar CAD also, yeah, no, I think we can see it across the board, but euro dollar has the strongest movements, I would say. But it's not, again, it's not the only one that is on the move. We have a stronger US dollar on this European morning open. All right. Let's see. I have more questions. Question from Sinatra to all of you. Do you use MT4 or MT5? I think one of the big problems of MetaTrader, MetaQuote, is that their version for the company, that MetaTrader 4 was so good that they had trouble pushing through selling MT5 to brokers. Profits Friday, yeah, we're seeing repositioning. We had some corrections. Remember, Forex, I think I said it a million times, Forex trading is never a one-way street. Comment from Jax, Bank of England, heads need beer money for weekend and shopping, money for Christmas. Oh yeah, it's the last rush of Christmas shopping. Christmas Eve is less than a week away, where I am usually in Spain. We have 3 holidays. It's Christmas, then New Year's, then Epiphany on January 6th, which means another opportunity to buy gifts and to boost the local economy. Okay, we have a chart. Let's try to. Oh, that's a very nice chart. Yeah, it's from the Wall Street Journal, right? So I'll try to share it also for everybody. Also, those not on the chat. So thanks for that. Okay, this is a chart of where the different members stand on the hawkish dovish rate. So Janet Yellen is leaning to the dovish side. I'm not sure that's true anymore because she did lead this rate hike. She did say she did provide some dovish words in recent testimony that delaying the liftoff too much would have risks. So I would put her a bit more to the center. Stanley Fischer, vice chair number 2 at the Federal Reserve, is more center, perhaps hawk. Jerome Powell, he doesn't talk too much. I guess it's center. Daniel Tarullo is dovish, even very dovish, with the recent statement, but he also went along. Lyle Brainard was very dovish, but she also went along. These are the governors. Okay, the governors have a permanent seat on the Fed, as you can see also here. It's an excellent chart. Anyway, and Bill Dudley, number 3 at the Fed, I would say. I don't think he's that dovish as this chart shows. I think he's a moderate dove. Okay. Now from the governors, Charlie Evans is an extreme dove. Jeffrey Lacker is a hawk. That's true. Dennis Lockhart, I think he's a bit leaning to the hawkish side. John Williams used to be a dove. Now he's a centrist. Loretta Messer, yeah, she's a moderate hawk. James Bullard, usually a hawk, even extremely hawkish, or Bully Bullard. Rick Rosengren, he used to be a much more dovish dove. Now I would put him in the moderate camp. And Esther George is certainly a hawk. Naranya Kocher Lakota, he's an extreme dove. I would say off the charts. I would put him at dark blue, but he's retiring from the Fed. And the new guys, I'm not sure we know about them too much, or at least I don't know about them too much. Anyway, we have the voting pattern. The voting members change every year. The composition of the Fed is expected to remain relatively balanced in comparison to this year. And anyway, Janet Yellen has the final word. Okay, if we look at the countdown to the FOMC, it's a bit messy here. Let me refresh this chart. Nobody is expecting a rate hike in January. We don't have a press conference, and it doesn't go with the gradual nature. Why doesn't this load? Anyway, I hope it loads soon, and we can show you the implied probabilities. No, it doesn't load. Sorry for that. Anyway, implied probabilities for rate hike. As far as I've seen, when it did work, this thing, we had it. It was sort of around 50-50 for March and more or less balanced for. Sorry, no chance in January. Okay, so thank you very much, EdsFX, for this chart. I've seen it before, and it's very useful. I think it should be updated just a bit, but anyway. I asked because you can upload your charts to MQL5 in MT4 and post the link. Yeah. Do you run with the bulls? No, I don't. I run on the beach on my own, just with my stopwatch, and that's it. No bulls. Yeah, thanks for that. Another image here. Okay. So what are we seeing now? Global GDP. Debt to GDP ratio. All right. Yeah, that's also interesting. I think this includes also private debt, right? Because work for us today. Because, for instance, in the Eurozone, Italy has larger debt to GDP ratio than Spain, but in public debt. Okay? But if you include private debt, Spaniards are up to their necks with mortgages, so it's a bit different. Okay, so these are huge ratios, but they include also private debt. So that's why you see Spain above Italy, for example, what I just explained. Where's the United States here? Number 16 at 233. It's just developed countries, right? Anyway, Japan has the biggest debt to GDP ratio, but a lot of that is held by the citizens, so that makes it a bit more safe. And yeah, Indonesia, very low rate. Ireland, it's mostly private debt. No, both of them. Singapore is surprising. Yeah, anyway. Let's look, let's see if... No, okay, so euro-dollar currently bounces at 108, just above 108, 108.20. We're seeing similar bounces also in other currency pairs. Dollar again 121.75. Pound dollar is just above 149. Okay, let's see if you have more questions. So we'll begin with the wrap and the preview for next week. Jim says, I think euro dollar is going down to 107.60. Well, we could have that with all the high volatility and low liquidity today. But let's see if we break 108 beforehand, because that's a tough line. It affects you run with your two dogs chasing me. Yeah, okay, that's a motivation. I found some traders saying that euro dollar morning move was a tactical Barclays big money maneuver. Okay, never know what Barclays fixed income with an emphasis on fixed what they do. I'm sorry for a serious beginner question though. Why are support and resistance lines so important? Why do markets react to them? What makes the price of support and resistance? Well, the basic theory says that if you have if the pair stopped at resistance line, that makes it that's a place where we have lots of that line is defended by people, let's say, selling the pair at this point. So the next time we approach this line, we could have a repeat of that, okay? And this prophecy also manifests itself, sorry, and we could have many people are looking at these lines. So in theory, if you reach a resistance line, the pair is expected to slow down and turn back, or if it has enough momentum to break above this line and never look back. Because it's an important line, so either it's a big break or a big bounce. Now that's theory. In practice, we often have these initial false breaks, and then the second move only makes it. Of course, there are better currency pairs than others. I have in Forex Crunch an article about the 5 most predictable currency pairs. I publish it every quarter. I can do some self-promotion and link to that. Anyway, we'll soon get to the that's the last one I published, so I'll share it with you on the chat here. And okay, anyway, that's sort of the tip of the iceberg regarding the theory. And let's get to the wrap for today. So this is the wrap up for Friday, the live market open on December 18th. It's the end of the Fed week, and the Bank of Japan tried to steal the show. So what did we have from the Bank of Japan? They surprised us with making a decision, actually, a change. They decided to introduce a new program that replaces an old program, but that's not what markets understood at first. We thought there's a lot of stimulus coming from the Bank of Japan. The yen weakened a lot, almost reached resistance at 123.60, but when the details became clear, a very small program was actually announced, and this might be a substitute for a bigger program, and that caused disappointment. Dollar yen, which already conquered 122.20, fell, which was the previous range, fell below this line, 121.74, support at 121.10. All in all, very exciting morning for the Japanese yen. It already sort of traded the whole previous range of 122.20 to 123.60 before falling to the the pre-Fed levels. Okay, details are still emerging, but in general, it's a very small stimulus program replacing an old program and serving as a substitute for something bigger, and that's of course less printed yens means a stronger Japanese yen. Okay. All in all, yesterday we had a stronger dollar, mostly against commodity currencies. Well, not against safe havens like the dollar and the yen and the euro. Then we had some dollar weakness, and now we have a renewed dollar strength across the board. In terms of figures we had yesterday, nothing that really shocked markets. The big shocker came from the Bank of Japan. Today we have the first post hike rate announcement from the Fed, from the New York Fed at 1 GMT. Let's see if everything went smoothly. Probably it did so at 1 GMT. The rate is expected to be between 0.25 and 0.50. Soon after the show, we have the Eurozone current account, not a huge market mover. For those of you trading the Canadian dollar, we have a big event. The Canadian inflation figures are expected to rise. That might support the Canadian dollar, which is still suffering alongside oil prices. Markets services PMI, not a big market mover, but today it's Friday. Low liquidity, triple witching, so every figure could have a stronger move. And last but not least, Fed member Jeffrey Lacker speaks at 6 GMT. Looking at the chart, we talked about dollar yen's crazy moves. Euro dollar supported at 108. Began falling this morning during the show. Resistance at 108.80, support 108, further support 108.60. 107.60 and 106.30. Resistance 109.50, 110, and 110.70. Pound dollar currently hugging the 149 level. Further support 148.50. Resistance 150, 150, 115. And we talked about dollar yen, so dollar CAD, the sky's the limit. Any fall in oil prices means a big fall in CAD. Any recovery in oil prices means a small recovery for CAD. Canadian dollar is very, very vulnerable. It's important to note in this context that oil prices have not reached their previous lows, but the dollar CAD is already way beyond its previous highs. Okay, but anyway, oil is depressed. This week we had inventories coming out more than expected. I don't know where's the bottom of the barrel. Perhaps at the post-crisis lows of 32.70, but who knows? And this has lots of impact. We talked about it before the Fed. Now the Fed took over. 71.50 on Aussie dollar, which is resistance. The pair is trying to recover. Yesterday, this risk-off sentiment pushed also the relatively resilient Aussie dollar lower. Further support at 70.65, resistance 72 and 72.80, which is an amazing separator of ranges. Kiwi dollar flirting, battling the 67 line, relatively resilient thanks to good milk prices this week. Higher milk prices, 67.90 is resistance. And support at 66. Okay, all in all, I think we're still seeing, bottom line, the Fed's rate hike is still pushing the dollar higher, but not all currency pairs are born equal. When we have positive atmosphere in markets, this is better for commodity currencies and also the pound, and not so good for the euro and the yen. And then we have a more worried atmosphere, falling oil prices, worries about stock markets, things like that. We have a stronger euro, stronger yen. But it's a bit now messy with the yen and the rate decision in Japan. Okay, so that's the wrap up for today. These are the main events. We might see lots of action because of low liquidity, triple witching, post-Fed repositioning, end of year repositioning. It's quite messy out there, so be very careful. So if you have questions, and we'll move to the wrap up. Why do you only draw horizontal lines and not only trend lines? I occasionally draw some trend lines, but I think horizontal lines are clear. With trend lines, you can sometimes cut through them, or sometimes on if you do it on daily charts, for example, the day ends at different hours and different time zones. So horizontal lines, I prefer very simplistic approach to technical analysis, and I focus on fundamental analysis. Okay. Another question from Sinatra: What do you think? What do you think about this? Say that your broker is normally trading against you, some transmitting your trades to the bigger hub, some handling your positions against your own ones. And inherent questions: How well, the broker that in theory is trading against you, that's called the market maker. Okay, so he doesn't actually need to transfer the trades to the liquidity providers, to the bigger banks, but actually the broker can match a buy order that you made on euro dollar, for example, with the sell order of another client of the same broker. Okay, or it can position itself against you. So some brokers make their money only from all their money from the deposits. The trader deposits money. He makes some trades. He or she, they make some trades. They lose all the money. The broker doesn't transfer anything to the real market and puts in all the profit. Okay, not all of them are like this. There are many very fair market makers. Well, okay, they don't transfer all the orders to the liquidity providers, but they are behaving in a fair manner. Okay, and they respect market values. Sort of quotes in markets. Okay. The other ones that you're talking about that do transfer them, they're called ECN or STP. There are different manners there to do things. So, or no dealing desk, NDD. But also there is also criticism about that because some just move their market maker, sort of outsource their market making operations elsewhere. So it's not always that. So you should find just a good and fair broker with a good reputation, regulated in a respectable jurisdiction, and it matters a bit less if it's a market maker or STP, ECN, or NDD. Okay, hope this answered the question. And now to the preview of next week. So this is the preview of the Christmas week, the penultimate week of the year after the Fed shorter week. Okay, so it begins a bit early because we have elections in Spain, general elections. It's a four-way race, four horses there. It's a bit messy. We might have a hung parliament, which is bad for the euro, but we might have a coalition, probably a coalition, right-wing coalition or left-wing coalition. Markets prefer a clear outcome, one party absolute majority. We will not have that, but that's more or less priced in. We'll talk about this on Monday, about the results and their impact. It shouldn't have a big impact. It's not the ECB, but it's still the continent's fourth largest economy, and it's still something to watch. I will be watching it, of course, because I live in Spain. Then on Monday, we don't have any big events apart again from echoes from today's probably wild trading, the Fed, and also the elections in Spain. And on Tuesday, we have the final US GDP figure. This is expected. So we had an upgrade of GDP in. Let's see. This is the fixed rate calendar on Forex Crunch. US GDP figures tend to be revised quite a lot. So last time we had, okay, it's expected to be confirmed at 2.1%. It's an annualized figure, so it's the quarterly rise multiplied by 4. It's expected to be confirmed at 2.1, which is more or less alongside the averages of the Fed, their median forecast for this year, the next year, things like that. So more or less same old, same old. Okay, but we might have a surprise because we sometimes have the surprises there. It's the last figure for Q3. Okay, that's perhaps the most important event for the week. On Wednesday, we have final UK GDP. This figure doesn't change too much. It's much more stable than in the US. Perhaps the composition of growth changes, but the bottom line number doesn't change too much. We have US durable goods orders, which is the core figure is useful for investment for the future. Okay, and we have new home sales, which is also good to see future building of homes and things like that. Lots of economic activity that is the result of selling a new house. But I think the main event for the greenback is, of course, GDP. Then, so that's Tuesday and Wednesday. Thursday is already Christmas Eve. We do have some releases there, but liquidity is extremely, extremely low. On Friday, Christmas Day, markets are basically closed. So we do have some figures coming out from Japan, which is not on holiday, but basically your broker might have everything closed. It's Christmas Day. Monday, the 28th, in many countries, it's Boxing Day, another day of holiday after the weekend, the Christmas weekend. So also we don't have any events, and basically also some brokers will not operate. It's very very quiet. And then afterwards, it's the agenda already for the following week, of course, not only next week. We have on Tuesday the 29th, CB Consumer Confidence, sort of the first post-Christmas meaningful event. Personally, I will be here on Monday, the last show before I'm going on vacation. Then I will be on vacation from the 22nd to the 29th, and I'm making a comeback, if you wish, on the 30th. To talk about what's going on, and we'll have the show on the 30th. On the 31st, of course, January 1st is a holiday, but we will talk about the new year. We'll prepare you for the new week of the new year, the new month, the new quarter, perhaps some guesstimates for 2016. Remember that today FX Street has a panel of very, very interesting people. Adam Button, Ashraf Laidi, Boris Schlossberg, Valeria Bednarik, and I hope I didn't forget anybody, hosted by the one and only Dale Pinkert. So we'll have also their estimations, discussions for 2016. Will 2016 also be the year of the US dollar? Probably not. Okay, so that's the agenda for next week. Relatively light week, but we still have echoes from the Fed. We still have final US GDP on Tuesday, which is a big event, and the final positioning year-end adjustments, which could also be quite extreme. Okay, so thank you very much. Let's see if we have more questions before we say goodbye. Does ECN and STP mean the same? What is the difference? It's different methods of passing the liquidity. I don't have a full explanation at the moment, but basically it's transferring the deal to someone else, moving it to the real market. Sometimes it's called no dealing desk as well, NDD. Sinatra says, yes, I choose BaFin registered. I saw many strange FX providers lately registered in Malta, Bulgaria, or elsewhere. Yeah, these countries have more lax regulation and they're part of the European Union. So it could be a bit questionable. Cyprus is improving, by the way, in terms of regulation. Can't find any mention on my calendar of the post-Fed rate hike. Yeah, I can confirm that it's at 8 Eastern Time. I've seen that on other news sites, and and you can follow the New York Fed RSS feed if you want it directly from the Federal Reserve. Let me see if I can find that. You're all welcome. Thank you very much. China always does something over Christmas on folks' faces. Yeah, that's true. So I would not be surprised if we have some kind of announcement, maybe a cut of the reserve ratio rate, perhaps an interest rate cut. In China, they have a different calendar, so we could, of course, have some surprises. Then I talked about what's expecting us in terms of the known unknowns, not the unknown unknowns, as Donald Rumsfeld said once. Anyway, it's going to be because of the Fed, because of low liquidity, I think markets are not going to be dead flat this holiday season. Okay, so that's it. I guess I answered all the questions. So that's it for today. Thank you very much, everybody, for coming. Be careful today, and I wish everybody a safe and successful day and a happy weekend. And we'll be here on Monday to keep you up to speed. One last look at euro dollar, still stable above 108. 108 round number, holding up so far. Okay, so that's it for today. Thank you and bye bye.